Hello, everyone. Thanks for joining us at Manufacturing Talk Radio. Today we have Norbert, who's the Director of Industry Surveys for Strategas Securities. And he's on our show every month, and he gives us an update on what's going on around the world, at least from the perspective of money. So welcome, Norbert. Appreciate you joining us today. And
thank you.
I see the new edition that we have where you have your report on the screen for everyone to look at and see. And so why don't we get to it and give us what's going on in the world?
Well,
not that I'm sure we want to know about it. You know, there's a lot of bad things happening. Yeah. So you're on.
Well, good morning to you, Lou, and pleasure to be with you as always.
Thank you.
Yeah, I think if you look at the screen and see the data, it gives you some idea of the things that we're tracking on a monthly basis to try to figure out what the global manufacturing picture is all about. And I think collectively it does a pretty good job of providing that information for us. And historically, it says that it really does do that. So I'll remind our listeners and the value that we're looking for is any indicator above 50 would be where we have 50% or more of a particular index. Indicates growth. If it's under 50, it indicates contraction. So as you go through, think in terms of we're talking about where is the global growth. If there is contraction, and there isn't much of it, frankly, if there is contraction, it'll tell us where that contraction is taking place.
I just want to point out to our listeners that it's the first column or second column on the left that is referring to September 2021. But the value of the historical data is very important. This way you can see trends. And I think that's of great value. So I thank you for that. So new orders. Seems like it's continuing to grow.
New orders are continuing to grow. In fact, when you look at the overall data, what we see is growth in many countries, particularly the US and Europe. And it looks to me that we'll continue to see that. What's confusing is when we see the ISM data, both indexes above 60, and manufacturing at 61.1 and services at 61.9. It looks like everything's just all well and good as far as the economy is concerned. Yet we still hear stories of places in the economy where supplies are not getting through. The auto industry isn't getting the chips that they need for the electronics in their vehicles and so on. So it's really somewhat of a paradox that things are really good, but they're not really.
Well, I can attest to that as well. Our primary business, All Metals and Forge Group, our sales are wonderful, but we have a hard time shipping. We don't have containers, we don't have ships, we don't have drivers, we don't have trucks, there's a lot of things that we don't have. And last month, they came out with a new number from the US government about those people who quit their jobs. And I've never heard them come out with that number. So there are a lot of people that are looking to redefine themselves, leaving an industry, trying to find better living circumstances and enjoying their work more and so on and so forth. So there's a huge number of people that have quit and looking to do something else.
Yeah, and it seems that, many cases, people are trying to improve themselves, they're trying to do better. And we've seen the increase in minimum wage. That should provide an incentive for some people to value their jobs higher. What we've really learned through all of this is at a minimum wage, and in fact, I would make a case for not having a minimum wage, because the minimum wage set a very low standard, and people were not able to get a sufficient income coming from that, and they're going to continue to value those jobs low, at a very low rate, if we push a specified minimum wage. And what I'm really looking at is the probability that even at $15 an hour, all that's going to mean is that becomes the new minimum, and those people will not get a raise in the next 10 years.
Correct.
Because it's got to work back to where it's productive.
It's almost like we've instituted a system to make sure that people stay poor.
I'm not sure it's almost like that. I think it's exactly like that.
Okay. So where to from here, Norbert?
Okay. Let's, we touched on ISM, and you guys do a good job of reporting on the ISM indexes. So I'm not going to go into that other than to say, wow, both of those are above 60. They've both been above 60 for 3 months. They had a lot of excursions above 60 in the period prior to that. So it says U.S. manufacturing, as it's reported through ISM, U.S. services as it's reported through ISM, those segments are doing extremely well, and should continue at least in the near term. Now, you mentioned the problems with logistics and what we're calling supply chain challenges and problems and so on from that.
Right.
We really have a situation where from its origin over in China all the way through to the consumer in the United States, there are challenges at every level of the supply chain. There's no easy way to get through this and so on. And some companies, I think, need to benefit from what we're seeing right now. I won't use the name, but everybody knows who the major aluminum producer is in the United States, and they have had. They now have the first time that they've even talked about a dividend in 13 years.
Mm-hmm.
And so, dividends usually, we're looking at excess cash. We have a little cash, we can do something else with it. We can invest it, we can do a dividend. If they want to get back to being a dividend champion, somebody that long-term investors are interested in pursuing, they have to start to build that record as consistently providing a dividend. So obviously this company thinks they can begin to establish themselves or reestablish themselves in their ability to pass through a dividend to the shareholder.
But I don't fully understand, and there seems to be at least a conflict in my mind. And you're talking about aluminum. Right now, there's a shortage of aluminum, and the prices are higher now than they've been in a very long time, and they're making record profits. They're going to be giving dividends, but they don't have enough aluminum. And there's other materials as well that are in short supply, again, for all the reasons we mentioned earlier. So it's like the more business we do, the worse the situation gets.
Well, you can go broke at higher volumes, right?
Right.
And hopefully that's not the track that we're on from that. But again, if you go back to a company that is seeing some prosperity for the first time in 13 years, you know, the way to the cure for high prices is high prices.
Right.
We'll see that base spread into products and so on. You know, in the aluminum industry, there's the commodity aluminum that might wind up as siding on a house, that type of thing. And then there's the aircraft quality aluminum, the high grade aluminums that you build airplanes out of and so on. That's a completely different commodity, a completely different segment of the business. And to be successful in the aluminum industry, I think you have to have both.
Right.
You have to have some commodity for some of the lower grades of product, and you have to have the higher grades of product. That really is where the industry makes its money. Mm-hmm. And they have not been able to do that over this period of 13 years that they've gone through. Hopefully, what we'll see is as their volumes increase, they can also avoid raising prices, because the additional volumes, as you well know, in manufacturing, at a certain point, it becomes where you've paid all your fixed expenses and debt and those things. You get some pretty good margins out of that if you particularly if you stay there long enough.
Right, you are. So we are, you know, looking at the global aspect, and so why don't we kind of hit on that and see what's happening continent by continent and so on.
Okay, let's jump down to the bottom of my spreadsheet, and we're going to look at the Eurozone and what's been happening, and the 8 Eurozone countries that are involved in the Eurozone. The rest of Europe is so small that their manufacturing input collectively counts, but it doesn't add up to anywhere near what the rest of Europe produces from that. And we see the Eurozone is at 58.6, down from 61.4, down from 62.8, down from 63.4. And so we see the trend. It's growth, and it's slower growth than than what we've seen recently, and slowing growth. That's a pattern that I expect to see, that once we reach a point where we're seeing significant growth in the industry, then it tends to peak out, and we see continuation of that. So as far as the Eurozone is concerned overall, it should be pretty strong through first quarter of next year anyway, because it's got a good growth pattern for right now. Then if we look at individual countries, Greece is at 58.4, which is not as good as the overall for the Eurozone. But then again, Greece has a relatively small manufacturing sector that they're consistent. A lot of it is food, et cetera, that they manufacture. France is at 55, and I believe that's the lowest of all of the Eurozone countries. France's exports are are very consistent because there's a lot of trade between France and the UK, but still not as strong as we see in some of the other countries. Netherlands is almost always the leader in the Eurozone, and they're in at 62 this month, down from 65.8. They have picked their customers well, I think, and so their customers leave them in pretty good shape in terms of consistent demand. Spain is at 58.1, Italy at 59.7, Austria at 62.8, and Germany at 58.4. Now, there's absolutely no doubt who the economic leader is in the Eurozone. Germany is by far ahead of the rest in terms of total productivity, global exports and so on. They build a lot of cars in Germany and export them around the world. They have a lot of plants that are good producers and so on. They have a lot of, they have a huge presence in the United States from a manufacturing standpoint, as do some of the Japanese companies.
Being that you mentioned automobiles, I just saw something in the news a couple of days ago. And for all you aficionados who like classic cars and expensive cars and the latest and the greatest, Rolls-Royce just came out with their latest new car. Unfortunately, I'm not remembering the name of the model, but it's a 4-door convertible with a hard top for $18 million. I don't think that they're going to have a problem with production, though. So that's probably a good thing. Let's switch for a moment, to our bigger partners, trading partners, being Canada and Mexico. What's going on up there?
Okay. Mexico is still a very bleak picture. Mexico, there's just not a lot of change taking place. So if we look at Mexico's number, it's at 48.6, which is not where they would like to be at all. They'd like to be above 50 and seeing some growth, but it's also not as bad as it could be if it were falling down into the low 40s and so on, which we saw some of. So Mexico is struggling and will continue to struggle. What problems they haven't created for themselves, the United States has probably created for them. And that probably will continue. If we look at Canada, Canada came in at 57, down from 57.2, up from 56.2, up from or down from 56.6. Canada tracks well with what the United States does.
Always has.
They benefit greatly from the relationship. Now that they've reopened the border, that should help Canada even more, and see more business passing through their airports and ships and etc.
Right.
So Canada, I think, has is going to trail the U.S. by a month or two, which is typical for that. And then overall, it's going to be a real plus for Canada as we come through this. They've had their fair share of problems, but not as great as many others.
And their tourism also will increase, obviously.
Yeah, and there's pent-up demand for tourism, I'm sure. Americans like to go to Canada. They do like to spend a lot of money in Canada, and Canada likes to do the same thing with the U.S. If you go to Florida very often, you probably see there's as many Canadians there as there are Americans.
You see as many Canadian flags down there as you do American flags
Yeah.
outside hotels. So all in all, what do you see coming down the road? Do we have any headwinds that you think is possible?
Well, I think everything's a headwind. There's like we said, in the supply chain, there's so many issues, whether it's truckers or whether it's trucks or whether it's ports. The LA port, LA Long Beach port, this really shows a great weakness in having them as the lead port coming in from Asia. And, the fourth lane is open at the Panama Canal, and all this is going to do is encourage people to ship through the canal as opposed to shipping to Long Beach, LA, and crossing country from that. And the volumes will be enough to justify that. As I have mentioned many times on these broadcasts, the most important thing from a purchasing manager, supply manager, whatever, the most important thing is continuity of supply. Is you worry about whether you can get it or not first, then secondly, you worry about the price, and then third, you worry about the quality. And you got to get a mix of those three things that continues business and that business benefits from.
It seems as though that the price increases, and I'll use the word, these inflationary type price increases, it seems to be passed along to the buyer, whether it's industrial, manufacturing, or retail. They seem to be accepting the increase in prices, but you go into a store. My wife went into a store yesterday. She came home with a photograph in a Walgreens. At one aisle in particular, she took a picture. There was about 90% less merchandise on the shelves.
Right.
The prices went up, but there's nothing to sell. So this is going to be an ongoing problem, again, with regards to logistics and personnel, drivers, and retirees, and so on and so forth.
Yeah.
People leaving the industry.
Well, I have great faith that over time we solve all of our own problems. And we've got so many of them right now to solve. It's just going to take a significant period of time, I think, to get past mistakes that we've made. We've made a huge amount of mistakes in terms of political direction, of the things that promote democracy, etc. All those things have to go through a correction, and we'll see that. The cure for high prices is high prices when you start to kill demand, but we're killing demand at a much faster rate than what a good, healthy, prosperous economy should be able to support.
Mm-hmm. Mm-hmm. It seems as though, a matter of fact, I haven't seen any of this. Maybe you can answer it. We were talking about Canada a few moments ago. And Canada kind of tracks along with what the US does by a couple of months. Are they having the same kind of problems that we are in regards to logistics and supply chain and worker shortage and all of that. I'm not up to speed on that. Can you
Well,
enlighten us?
like most other things with Canada, uh, you know, if the United States catches a cold, Canada gets the sniffles.
Right.
And I think that's where we are now, that Canada gets some of all of the bad from this. And let me get that off the screen. Canada gets part of this, not all of it. And they have a great, you know, raw material supply, et cetera, that they can rely on to be able to do that. You know, I did a excuse excuse me. I did a paper back in it was an article that was published in a purchasing magazine in 1983 talking about inflation and how we have to find ways to deal with inflation, learn more about, you know, what the right tactics are from that. Right now, we've got oil prices, and oil prices will always drive inflation, or energy prices will always drive inflation, because we may go along where oil prices are stable for 10 years and then they go up 40% in 3 months. And so they're kind of the worst of all problems to have. And it's to our advantage economically to have a surplus of energy to where we keep pricing much softer than we get otherwise. You may recall several months ago, we talked about inflation, and I said then, I don't know what transitory means. You either have inflation or you don't have inflation. To try to qualify it as one type of inflation versus other types of inflation, it spreads, it's pervasive. And that's what we're seeing now is across a lot of industries and so on. And that's going to, people are going to continue to do that. We always note there's a relationship between supplier deliveries. If deliveries are slowing and extending, then that supports raising prices. And if they're faster and easy to get, then that supports softer prices. And certainly we're in the former of the two, where we really are supporting higher prices, but that's starting to turn around. It's going to take a while to get there, but you know, the other thing is this gets into contracts where we have various public service unions and that type of thing. They want to use this as an opportunity to say, oh, well, we need a big boost in our cost of living. For that, they don't allow for the fact that the price is probably going to come down if we don't get deeply into extending what's going on for that. And that goes with contracts from customers. You know, you go from a willingness to change prices and so on, but you know, just a good rule of thumb is for every contract, if it includes escalation, it should provide for de-escalation when the time comes from that. If it doesn't, there's not equity in the contract.
But you know, there's an interesting phenomena that we're experiencing at All Metals and Forge Group, and it's in regards to the price of oil, the per barrel cost, which now I think is at just about $90 a barrel. when it's around $60–70 a barrel, in my world, that's a good price. We do a lot of business in the oil and gas business. We supply a lot of replacement parts to oil rigs and oil machinery and so on. And now it's $90 a barrel, and you would think that there would be, that much more business, but it's not true. And this is where I think that the inflationary aspect comes into play. It's not necessarily affecting the supply chain, or my supply chain, in terms of supplying replacement parts and new drilling and so on, but yet the price is $90 a barrel. So I'm not clear on the how and why this is happening, because by all rights, oil and gas replacement parts and drilling and so on should be booming, and it's not. If anything, we now have some shortage in oil and gas.
Well, and again, that comes back to being a demand killer.
Right.
That at $90, you kill a lot of demand, and people look to other alternatives to do that. And the industry itself, if you look at the major oil producers and so on, they are when the price gets to $50, if it's been below 50 and it gets to 50, they start to be more positive and so on. When it gets to 70, they're saying, hey, we can make good money at this. We want to move as much production as we possibly can from that. And, oil has a value, electricity has a value. One of the problems with the docks around the country is, in many cases, they want to be able to replace diesel engines with electric motors.
Right.
But they don't want any new power plants.
Right.
So someone like you and I that measures things in common sense finds it very difficult to say you can have electric motors, but you got to have electricity, or else you're going nowhere.
It seems to be the mode. We want what we want when we want it, but if we don't have it, we're in trouble and we blame everybody else.
Got to be their fault. Couldn't be ours, right?
That's right. That's right. As we're approaching the end of our segment here, I do want to touch on China as to their PMI number, which is below 50. And I'm just wondering if your thoughts on this, that the U.S. tariff, the Trump tariff, has anything to do with China's not being where they would like to be.
Right. I'm sure that it has had an impact because anytime government, whether you like the government or don't like the government that's in place, but anytime government starts to allocate resources and decide how things are going to be done, it becomes a big challenge to respond to that and change over. At the heart of our relationship with China, there's always the rare earth minerals.
Right.
China controls a lot of the rare earth minerals that are commercially available. So they can respond and complicate the relationship anytime they want to because of that.
Not even to mention about chips.
Right.
Which has a tremendous effect on our automotive industry, our computers, electronics, and so on.
Well, and this is the time, for instance, that you don't want to have the conflict that we've apparently got between China and Taiwan.
It's an ugly situation developed.
Right. There's a huge amount of the electronics and chips and so on that China gets that are produced in factories in Taiwan. So they have a little leverage on the Chinese. You wouldn't know that from looking at news reports and so on, but China is very dependent on Taiwan. And they have a problem in that there's the commercial economy where supply and demand have to be met, and China has certainly depends on Taiwan to be able to do that.
Well, Norbert, I thank you for today's report. Do you have any final comments you'd like to add?
Yeah, I think just very honestly, we have to start looking closer and scrutinizing closer the things and the policies that are going on in this country. If not, we're going to wind up ceding ownership of a lot of economic resources to other people.
Well said. Well said. Washington, you got to listen to Norbert Orr. So Norbert, thank you again. Thank you very much. I appreciate your report and your significant ideas that help all of us understand what's going on or what's not going on. So I just wish to thank everybody for listening today. I recommend that you turn to Jacket Media Co., which is our mother company. We have Women in Manufacturing. We have a couple of monthly series, Manufacturing Matters, Manufacturing Making Waves. And it's all about manufacturing, and we're as regular as rain. We're on a couple times a week. And if you have any comments, questions, certainly send us an email. And by the way, you want to give us your contact information, Norbert? I forgot to ask you.
Yeah, it's NORJORE at gmail.com. So that's NORJORE, all small case, at gmail.com.
Excellent. Norbert, thank you very much. Appreciate your attendance.
Great to be with you.
Bye all.